Let's take a quick look at some of the U.S. listed Chinese stocks right now. NIO, the only one that's down in a big way, that is down about nearly 4%, although that's largely on probably delivery numbers that we got yesterday from the company. These moves coming as the House unanimously approves legislation that subjects U.S. listed Chinese companies to the same accounting oversight American companies are subject to. The law is expected to be signed by President Trump, and it certainly could pave the way for a number of Chinese companies to be delisted. We spoke to the bill's co-sponsor, Maryland Senator Chris Van Hollen, yesterday, asking him about the potential for a mass exodus of U.S. listed Chinese companies. Take a listen.
If we allow a country to pass laws that shield their own companies from providing important information to American investors, then other countries would follow suit. Right now, China is the only outlier in the entire world. And so this is a time where their companies are going to have to, find a way to provide this information or ask for their own governments to change some of these rules.
Chris Van Hollen there yesterday speaking to us, Zack, before the House vote, but we have certainly seen it pass unanimously in the Senate and House now. Moving forward, it's going to be interesting to see how some of the Chinese companies read this move. They do have 3 years to comply, but we've already seen names like Alibaba, JD, and NetEase go for secondary listings in Hong Kong this year, raising speculation that maybe they could sort of be laying the groundwork for any potential of an exit from the U.S. But it is worth noting that it is the accounting firms that ultimately have to open the books per se. So even some of the big four names like a KPMG, if they're operating in China because of Chinese rules right now, they can't simply just hand over the books when asked over in the U.S.
Yeah, and I mean, when we talk about kind of the pressure that had been mounting here, it's interesting to see it culminate in this vote just because, both parties really have been stepping up pressure on Chinese companies here. I mean, earlier this year, let's not forget what happened to Luckin too, right? And when we think about auditing some of these companies and Luckin and the investigation into that coffee giant there in China, the numbers that seem to be fabricated. I mean, it's one of those things that we've heard from politicians too, not just the senator from yesterday's show, but really this idea that it shouldn't be easier for Chinese companies to access capital markets here in the U.S. and not have to disclose and have the same kind of audits going on for them that's going on for American companies as well, now coming to a head here. But to your point, I mean, I guess it does kind of raise more questions about what the Biden administration is going to want to do here, because as we covered, it seems that he's going to be following similar techniques here used by the Trump administration, not wanting to walk back those China tariffs, at least right away. But still, I think a lot to be learned about how aggressive his administration is going to be here to follow up on what we've now seen pushed through here in Congress.
Yeah, Zach, and I think it's also important to note that it used to be that with these Chinese companies, the main reason to come to the U.S. was largely because all the capital was here. But over the years, we have seen Hong Kong, for example, change their listing rules to be able to attract some of the bigger Chinese tech names closer to home, and they have been able to raise money there in a successful way. And so, there are a number of hurdles for these companies, even if they were to list closer to home because of the regulatory risks that exist in China. But it'll be interesting to see how they toe the line here or how they sort of weigh the risks moving forward.